Hello my fellow freedom builders and welcome back to the channel. It is the stock of the day time and we are going to have a look at Jabil Circuit here today. We are using the screener as always, where we are looking at the long-term TPI uptrend, a weekly TPI in accumulation oversold, and we are looking at an upside to the analyst estimates at least 10% over the next couple of years. So we are picking the JBL down here, if I can find it. Here it is, and it is just one of the many candidates. I have chosen this from the US market. We're looking at the TPI chart here, and we can see it is in a long-term green trend here, very long-term trend. We can watch that in a second. And we are in the weekly oversold accumulation phase, so it is an acceptable place to enter. If we're looking at the longer term chart here, we can see back over the last 1.5 years a very good uptrend here. If we are putting on a regression channel, we can see that we are in the lower end of a very nice channel, and we can also see that the TPI weekly, it is looking backwards and watching what is happening every time we have a drawdown, a correction like the one we are having now. And we are at a point right now where it indicates that statistically we ought to go up. But as you know, we're also looking at the valuation charts to see if there's some value in there that can help the stock grow. And if you're looking at it, it has a bit of a skewed earnings season here. So the next point here is on August 31st next year. So when we're looking 3 years ahead, it's actually almost 3 years this time. When we're looking at the current estimates right now, let's just put in here 15%. That is in the last year. The analysts we have are estimating 48% earnings per share growth this year and roughly 17% next year. And then in the last year here, ending in 2026, the overall estimates are at around 15% growth in earnings per share. All right, right now the PE is about 20. So if all of this holds through, if the PE can stay at 20, if the analyst estimates are holding through here, then over the next roughly 3 years, between 2.5 and 3 years, we should have about 102.3%. That is, of course, pure math. That is, if the earnings per share growth is exactly like this and the price earning is exactly 20. Now, it might not be so. We can see that the price earning over the last 10 years have been an average of 28, then last 5 years 30, but over the last 3 years it has only been 13.7. Right now it is around 20. So let's try and bump this down a bit and say, what if it drops to around 15 maybe? Well, we would still have a 52% rise in the stock prices, which is very decent, I think. Then what if we are removing the analyst estimates here and just saying, what if it only grew by 15% per year, meaning not 48.2, not 16.9 here, but just 15% every single year? Well, we would still have a 9.3% growth rate, growth in the stock price over the next 2.5 years. Now, it's not as much as before, but we have bumped the estimates way down. So let's just see here. I think this one actually disappeared. All right. By an earnings per share, by price earning at 15, we're looking at 21.7, and if it goes down to 13 here, we are looking at roughly 5%. So if we are bumping this way down, both the growth and the price earning, we can see that we still have a decent investment case. We're at least not losing money. So that is what we like to see. And of course, if the estimates are correct, we'll be making a ton of money. And right now we can get in at a very reasonable swing in the price. That is what the TPI is telling us. So this is a candidate, and of course this is, as you know, only educational and for inspiration. It's just to show how I am combining the TPI chart with the valuation chart. Remember, to ask questions under the video or on the Facebook pages if you have any questions for this whatsoever. I'm also putting a link to my stock scanner that I'm using for this in the text below the video. That's all for now. Take care of yourself and your money out there, and I'll speak to you again shortly. Bye.